Shibani Sircar Kurian, who's Executive Vice President, Fund Manager, and Head of Equity Research at Kotak Mahindra Asset Management. Great having you, Shibani. Good afternoon. Let me start off and take a cue from what we were just discussing with regard to PSU banks. That move today, yes, but let's think about this maybe from a 2-year perspective. A lot will need to be done if the kind of returns that we've received can be replicated, especially within that PSU banking pack. What's your sense? The ROA re-rating, ROA drivers, are there enough, is there enough steam in the ROA to sustain the kind of move we've seen already on the PSU banking names?
Hi and good afternoon, and a very happy Diwali to you and to all your viewers.
Wishing you the same, ma'am.
Thank you. So when you talked about PSU banks, let me just take a step back and maybe discuss what's happening in the overall banking sector and then come to the PSU banking pack. So our view on banks has been that this is a sector where there has been significant number of headwinds, lower credit growth, margin pressure, but we are possibly coming to the end as far as both credit is concerned, and therefore we start seeing some uptick as far as credit growth goes. And the recent management commentary seems to suggest that, especially where retail is concerned. And the second is the kind of margin pressures that bank was seeing that should start to abate. Of course, given the fact that there are no rate cuts at this point in time. So therefore, you have a sector where incrementally from here on, earnings growth should start to pick up, led by core earnings, and valuations are clearly in your favor. Now, in this context, our preference has been for the private banks. However, within the PSU banks, there are specific picks where some of the larger PSU banks are better placed to benefit both from credit growth picking up, especially on the retail front, as well as margins bottoming out because your cost of deposits start to play out in terms of lower cost of funds. And these banks, which have a better retail liability franchise, are well placed. The sector in terms of valuations is attractive, especially with relative to history, notwithstanding the near-term move. So overall, our view on banks is positive, slight preference for privates, but within the PSU bank, our preference remains for the larger names where you still see possibility of return ratio improving and valuations are in your favor.
Hi, good afternoon. This is Nehi also joining in, and once again wishing you and your team a very happy Diwali. Shibani, you've spoken to us about PSUs and private banks, but what about the third pocket in the financials basket, the entire NBFC group of stocks? Where do you think this segment could be headed going ahead? What about asset quality, disbursements, or overall your sense on this entire segment?
So our preference within the overall banking space or overall financial services space is slightly tilted towards banks. Within NBFCs, we have been fairly stock specific, looking at NBFCs where growth has been strong. And as you mentioned, asset quality is a clear differentiator. Within the overall pack, if you look at two segments, or rather three segments, which had seen some stress, one was the unsecured piece, which is typically your personal loan, credit cards, etc. The second part, where there was some increase in delinquencies, was the SME segment. And the third was the microfinance. Of this, the unsecured piece and microfinance stress seems to be bottoming out. On the SME or the small business loan segment, we will need to watch out for incremental stress. So at this point in time, it does not seem to be a major systemic issue. Now, within the NBFC pack, of course, valuations are not as attractive as it is in the case of banks. Therefore, and therefore, we have been selective as far as NBFCs go.
Minutes to catch your breath, Shibani. Please do that. You've got a host of sectors actually which have outperformed the market, right? One is PSU banks, another one is auto. Give us a sense on how you're playing consumption, Shibani. Is there a way in which, is there a particular theme you're riding on where consumption is concerned?
Yeah, absolutely. So consumption has been the other pack apart from banking where our view has been positive. There have been a slew of policy measures, both from the fiscal side, starting with the tax cuts that happened during budget, followed by the GST rationalization, as well as monetary push because of the 100 basis points of rate cuts that we've seen, which have translated into lower lending rates as well. So overall, our view on consumption has been positive, but within consumption, our bent has been towards the discretionary path, where we believe that because of the policy measures, discretionary consumption should get back on track. And if you look at the data that is flowing through, especially during the festive season, that data seems to corroborate that there is indeed some pickup in demand that we have seen across the board. And within that, the biggest beneficiary in our view is the auto pack, especially the two-wheelers, as well as some amount of the entry-level four-wheeler segments, which had been languishing for quite a while. So therefore, in the entire discretionary space, one of our preferred picks has been the auto space, specifically the entry-level four-wheelers as well as the two-wheelers, which we believe will benefit significantly given the kind of policy stimulus that we have seen. The data, as far as what we have seen, initial signs during the festive season seem to corroborate that. Of course, post this, we'll have to see whether the demand trend continues or not, but clearly it seems to be moving in the right direction.
So, auto is a pocket that you're liking from the entire consumption theme, Shibani. But what about consumer durables from that pack? We've seen the GST relief come through. They have been passed on. Of course, we'll see a staggered effect of that as well. But by when do you think we could see a revival in this entire segment of consumer durables? And where do you think that segment is headed it's headed ahead? Because now that summer and monsoon pressure is also largely behind us.
So some parts of the consumer durable segment clearly got impacted because of the weather patterns. Some amount of that demand should start to come back. And of course, the weather related disruption as far as demand goes is possibly behind us. So this is also a segment that does benefit because of the changes that you have seen from a policy perspective. We do expect to see going forward some amount of that numbers coming through. Within the consumer durable pack, if you look at the data that is coming through, the smaller ticket consumer durable segment seems to have received a benefit or a push faster. So maybe we will see that picking up. Overall, if you look at the entire discretionary basket, while we spoke about autos as a pack, but we also believe that consumer durables, retail, quick commerce, all of that falls into the same basket. And hence, the entire play on the consumer discretionary side spans across all these sectors that we have been discussing.
Shivani, which will stand out for you over the next 12 months, turnaround-wise and valuation-wise? Of course, there's plenty with regard to earnings that is anticipated maybe over the next quarter or two. But give us a sense on that one sector that you're super bullish on over the next 12 to 24 months.
So one is from an earnings perspective, we do believe that while the current quarter earnings estimates are muted, and if you look at consensus, we are looking at a single digit kind of an earnings growth for Nifty. H2 should pan out to be better in terms of earnings. And then going into FY27, it is likely that Nifty earnings picks up and we see mid-teens kind of an earnings trajectory. From an earnings perspective, one large sector that stands out going into FY27 is a sector that we've already discussed, which is banks. Banking sector earnings for 26 is likely to be muted because of the various factors that we were discussing. But from here on, going into 27, this should be one large sector that contributes to the overall earnings for Nifty as a whole. Apart from banks and consumption, which are our top two sectors to look at, the other segment that we have been positive on is healthcare as a space, specifically hospitals. Here we believe that penetration levels continue to be low. There are bed capacities that are being added. However, we believe that occupancies will catch up. And more importantly, we believe that return ratio profile of the sector remains strong and healthy. And valuations, while there has been an uptick, given the growth expectation, valuations still are reasonable and there are pockets of opportunity. So net for us, three large sectors: discretionary consumption, banking, and healthcare. These are the three segments that we are positive on.
And Shibani, what about IT? If I could get your view over there, given the kind of underperformance we've seen and the numbers so far, they've not been all that bad. In fact, they've been quite decent. Your outlook on IT, and do you believe it could be a turnaround sector or would it be a contra call for now?
So IT is somewhat of a contra call for now. The way to look at it is, of course, so far the results have been in line with expectations or slightly better than expectations. However, there is still some degree of uncertainty as to how demand starts to improve in the near term. Remember, we go into the second half of the year for IT, which is seasonally a weaker quarter because of lesser number of business days, furloughs, etc. So, therefore, near term, it is likely that the sector does see muted trends as far as top line growth is concerned, which is the primary driver for the sector. However, there is also a lot of debate that's going on as to whether AI will take away growth from the IT services pack. Here, our view is that as enterprises adopt AI more and more, there is a lot of work that is there for the Indian IT services segment to benefit from. And therefore, while near term trends would likely be challenging for the sector, but one, as we see macro stability come through with rate cuts in the US, that would be one key factor to watch out for. And second is as enterprises adopt more and more AI in their overall workflow, IT sector should start to benefit and start seeing improvement. Remember, deal wins have been strong. So if you look at the data from the second quarter as well, deal wins continue to remain fairly healthy. It is about translation of deal to revenue, which is awaited. So this is a sector which we are on a wait and watch mode.
Okay, on IT, a wait and watch. Pharma, Shibani, it's something which has done reasonably okay. Scope for upside from here, just trying to get a sense.
So pharma is a large sector, and there are different packs or different parts of the sector that we need to evaluate. One we already discussed, which was the healthcare pack and the hospitals. So that's one segment of the pharma space where we remain fairly positive. The domestic pharma piece, which is the domestic formulations business, continues to show steady growth. And here we believe that growth trajectory should continue and margins hold up fairly well. And therefore, within the pharma pack, our bent has been towards the domestic pharma piece. Some opportunities also coming through in the CDMO segment, given what's happening globally, where large innovators want to diversify their supply chain and will possibly look at opportunities in India as well as the healthcare piece. The US generics market is somewhere while pricing pressures have abated and have stabilized. But clearly, growth is something that we will have to wait and watch out for. And of course, the uncertainty relating to tariffs still remains, though the chances have possibly reduced. So, if you look at the pharma pack, the three key segments where we are positive: one, the healthcare piece, which is hospitals; second, domestic pharma; and also specific names within the CDMO pack.
All right, thank you, Shibani, for that. It's been an engaging conversation. We've covered wide range of sectors and we've spoken about things that you like. Thanks so much for coming in, sharing with us and our viewers all of your views. Thanks for coming in.